Good evening, everyone. My name is Damon Holland from Holland Homes Team, and thank you for joining us for our buyer seminar. Tonight we're going for hosted by NexGen. So tonight we're going to talk about everything you need to know as far as purchasing a home. We're going to start from the time you think about buying a home, how much you can afford, all the way through to closing on that home. So we're going to cover a lot of material tonight, but at the same time, we're going to keep it short and brief. Some of the details we might not explain or go into, but you can definitely contact us and we will be able to answer all your questions. But we do want you to get you a good understanding of home buying tonight. Like I said, it's going to go through 10 steps of home buying. We're going to talk about the market. We're going to talk about a little bit of everything. Also, tonight we have a guest speaker, Jennifer Spigner. She's a loan officer with Guild Mortgage. She's been in the business. She's been with Guild Mortgage for 2 years, but she's been in the business a lot longer. So she's going to handle and answer all of your finance questions and anything dealing with the loan mortgage and anything like that. Also, Jennifer, go ahead and talk about yourself real quick and introduce yourself also.
Hi, guys. Thank you so much for inviting me, Damon. Yes, my name is Jennifer Spigner. I'm a mortgage loan officer here with Guild Mortgage in South Carolina, but we do all 48 states. So I am originally from Charleston, South Carolina, born and raised. I've seen so many things changed in the last few years in our Tri-County area. Great things, of course. So I am mortgage loan officer here, and I am just so happy to be here. Thank you so much once again.
Absolutely. Thank you. Thank you. So let's go ahead and get right into it. 10 steps to home buying. This is a quick agenda. A couple of things I told you about we're going to be talking about. I'm going to talk about the current market. I'm talking about the buyers versus sellers market. Jennifer's going to talk about the loan application process, buying a home. I'm going to jump into inspections, and I'm going to show you a short clip about the Homes for Heroes program. So, like I said, current market. Current market right now, technically, we're still in a seller's market, which means higher demand, low inventory, shorter list times, multiple offers, and home selling and going above list price. Your buyer's market, you have a little bit, is when inventory is higher, you have a longer list time and different things like that. Also, you got price reductions also. But like I said, technically, we're still in a seller's market, which means sellers which means low inventory. I put it that way. Compared to the last 2 years, we're still low inventory. It has risen, but we're still low inventory before we can change into a buyer's market. It actually has to go to a balanced market first, also before going into a buyer's market. But one of the things I like to point out for as buyers, you still have a little bit of leverage even in this market because with the interest rates going up, and Jennifer's going to definitely hit on that also. But the interest rates have gone up, which means there are a lot less buyers coming into the market. So a lot less buyers coming into market, they have more of an option as far as what they can choose and what they can buy. Now on the seller side, that calls sellers to have a little bit longer list times. They're coming down on prices and different things like that. That's why I say right now buyers have a little bit of leverage, more leverage than you think. But technically, we're still in the seller's market. So that's kind of the current market right now. And we'll go right into making home ownership possible with Jennifer.
All right. Thanks again, Damon. So, making home ownership possible. This is very, very important. This is how you can change your life drastically in a positive way. Being able to be a homeowner so that you're not renting and so that you can be able to capture some equity, which is a way that you would be able to build wealth. So, that's what it's all about, home ownership. So, let's go with the slides. Okay. And this is just a small little agenda talking about budgeting. Very, very important. The actual process when purchasing a home, the different financial options that are available to you, and why choose the company that I'm with at the moment, which is Guild Mortgage. So we can go to the next slide. All right. So this is home ownership benefits. You have to know what type of benefits you're getting into when you're trying to make a purchase or trying to make an adjustment in your life this big. So just rent versus buying. So when it comes to ownership, it's all about the benefits. And the major benefit that I want to really point out, there's four that I have on the slide. There's a lot more, but the major benefit really is just having the ability to have financial freedom. So that's having the tax benefits. When you go to your tax preparer, like most people are doing nowadays, even in this season, it's tax season right now. This is how, as a homeowner, you can actually deduct mortgage interest and property taxes from your income. So what does that mean? More money coming back to you. Who doesn't like more money, right? So then we also have mortgage payments that build equity, and equity is basically the value that's inside of your home. You can actually borrow money from that, especially for those who have kids that are going to college that's coming up. You can take the equity out of your house to help pay for college, so that way you don't have to deal with student loans. Big, big, big piece there. Make the space your own. This is just having the freedom to personalize your space. And then lastly, just being able to get your mortgage at a fixed rate, a fixed price. So your mortgage payment never changes, but rent can change every year. So just being able to know that you're saving money and you're building money when it comes to home ownership. Okay, next slide. All right. Budgeting. This is a big, 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 big piece of the puzzle here when it comes to budgeting. It's all about knowing how to operate your finances, being able to track those expenses, being able to make sure that you're not overly using your credit card, just being able to understand how your income and your expenses that go out every month, just being able to manage those in a way to where how much money you have coming out, how much money you have going in. So budgeting is a huge, huge piece when it comes to home ownership. If you're not on a budget right now, I would definitely recommend that you seek out someone who can help you with putting a budget together, because that is going to help you now and it will help you in the future, even after you make that purchase.
Jennifer, I got a quick question.
Okay.
Can you touch on how important, and also how you incorporate debt to income ratio when you're doing mortgage loans? Because I get
Okay,
that question
perfect.
a lot.
Yes, yes. So we're wanting to get further information about debt to income ratio, correct? Okay. So to touch on that, debt to income ratio is
Yes.
just exactly what it is. It's dealing with the debt that is showing on your credit card, and it's also dealing with the income that you get monthly from your paycheck. So depending on the loan program that you get, your debt to income ratio has a limit or a cutoff that it needs to be at so that you can get pre-approved. I always tell people it goes back to budgeting, knowing what your income is and knowing how debt heavy you are, how much debt you have. That plays a major part when it comes to the pre approval process of being able to purchase a home. So that's very, very important. We're going to talk more in depth about that as we move on with the slides, because I do have some further information about that. So I hope that answered your question briefly until we get there.
Yes, absolutely.
All right, perfect. All right, moving on to how much can I afford? This is a question that I ask every client that I am given the opportunity to service. How much are you wanting to purchase? How much are you wanting to pay every month? That mortgage payment comes every 30 days. Just kind of knowing what's comfortable for you. Like some of the questions here on the slide. How much do you currently spend on housing right now? Knowing that, that's also a part of budgeting. How can you spend and how much do you want to spend on your house? Knowing how much house you want. How much will total maintenance costs be, taking all utilities in account? So this is really all about budgeting. Going back to that first slide we were at, you just have to know these things, sit down and just kind of analyze what's going on with your income and what's going on with your expenses, and just kind of having an idea of what you can afford. It's a really, really big piece to kind of sit down and think about. So take some time on this for sure when you're ready to get into that process.
Absolutely. Real quick, I just want to say I definitely take some time out with my clients and tell them, hey, definitely pay attention to this, because you still want to be able to live after you pay your mortgage. You still have to be able to live comfortably after you pay your mortgage. So definitely watch this one. And like you said, it goes back to budgeting and making that budget and making sure you're comfortable too.
Agreed. Yes, absolutely. All right. So people that know me love that I love to educate. I love giving tips to kind of help you to smooth out that process. And so here's some tips to get started. You definitely want to know what type of credit health is what I call it. Your credit, how healthy is your credit? Credit determines how how great of an interest rate you're going to get. Interest rate is a huge topic in this market, but it's also just one piece of the puzzle. So knowing what's on your credit, knowing what your credit score is definitely a huge, huge must when you're trying to get yourself prepared to become a homeowner. Your realtor is probably going to ask you. I definitely, as a mortgage loan officer, will ask you. So it's good that you know where you are for sure as well. Explore down payment options. Not everybody has all the money in their bank account, in their checking account or savings account when it comes to purchasing a home. You have to pay down payment, you have to pay closing costs. There's some other expenses in there as well. So just knowing the type of options that you have, within your state or within your county, there's grants out there. There's government programs out there that you can explore for those who are in South Carolina and even Georgia, because I'm licensed in Georgia also. There's a lot of different programs for the first time home buyer when it comes to down payment options. So just being able to be educated about that is another piece. And then it's getting pre-approved. Having a pre-approval is what your realtor, Damon, is going to ask you for, because that lets them know what type of purchasing power that you have. So getting pre-approved is the main portion of the game when it's time to get into home ownership, for sure. It also tells them how credit worthy you are. Okay. Hiring a real estate agent is next after that. Damon is free.
That's the
Give him
best
a
one.
call. All right. And just remembering, it's not really what you qualify for, is what you can afford. And what I mean by that is you can get pre-approved for, let's say, $400,000. But when you look at the mortgage payment of what that looks like, when you look at the closing costs and the down payment of what that looks like, that might not be what you want to spend. So like it goes back again to budgeting. I can't stress that enough. Just knowing how to budget and knowing what your finances look like, not having somebody to tell you, but you're coming to the table knowing exactly what you got going on. You know what your credit looks like, you know what's on your credit, you know how much debt you have, and you know the income that you're bringing in. Just kind of knowing those things up front definitely will help you for sure. So those are some tips. There's thousands of tips, but those are just a few that I know a lot of people tend to have questions about when they come see me.
Just to add on real quick, that pre-approval is also even more important as far as us as a real estate agent side, because a lot of offers, when we put it on an offer to a seller, they want to see their pre-approval letter with it. It makes your offer much stronger when you have that already pre-approval letter with your offer too. So that's another reason why we definitely look for that pre-approval letter.
Okay. All right. So we just kind of brought this up a little bit. So diving in a little deeper, what is down payment assistance? Like I mentioned before, everybody doesn't have all of the money that they need up front to close on a home. Yes, you need money up front. Really? Yes, you do. Down payment is one of those options. And so basically what down payment is it's a percentage of the sales price of the home. So just depending on which loan program you get into, in Guild Mortgage, we have over 600 loan programs, but certain loan programs require different types of down payment. So just being educated and understanding, and your lender will tell you which program has a specific down payment amount because every program is going to be different. But just keep that in mind. Down payment assistance is when you have a third party. For example, if for those who are in South Carolina, you have South Carolina Housing. You have Origin, which is a more of a county program, but just South Carolina Housing as a whole, because it's dealing with the whole entire state, or whatever state you may be in, there is some type of down payment assistance. And you can research those things online, or you can connect with the lender and they'll be able to educate you on what down payment assistance options you have. Keep in mind, you have to be qualified for those. So, some of the things that you need to know to be qualified for those assistance programs is your credit score, your debt to income ratio, which is kind of what we touched on just a little bit. Maybe even income may play a part in that. They may have income limits. So just kind of being more educated and understanding what it is, and that, yes, you do have to qualify for those options. All right, so this is just a little bit about the home buying process. As I mentioned before, it first starts with getting pre-approved, and you'll get pre-approved by someone like me, someone that's a mortgage lender or a mortgage broker, who will pull your credit. You'll fill out an application. They'll pull your credit. They'll look at all of your documents, such as your pay stubs, W-2s, all the financial information, bank statements. And then once they take a look at that and everything looks good and put together, that will be getting pre-approved. Once you're able to get pre-approved, now we got to reach out to Damon, give him that pre-approval, and now he can start doing the fun part with you, which is going out shopping and looking for a home. During that time, you want to stay pre-approved. So in order to do that, you definitely want to do it within a timely fashion, a timely manner. You don't want your pre-approval just sitting there collecting dust. You want to definitely reach out, start shopping, start looking at some houses that you like, so that you can put those offers in, get those offers accepted, get your contract going, send that back to me. And then we pretty much go through all of the underwriting processes through that. And then once that happens, it's everybody's favorite day, my favorite day, Damon's favorite day, I'm sure, closing day. And then here we are. Yes.
Absolutely. Yes, yes. Real quick, can you touch on, elaborate a little bit about staying pre-approved as far as scenarios going out and financing something else when you're in that pre-approval looking for a home kind of area and somebody goes out and finances something else, what that means, how that affects it?
Yeah, absolutely. So when I say stay pre-approved, I mean doing all of the things that you were doing prior to you sending me those documents and getting pre-approved. So paying your bills on time. You don't want to just stop paying your bills because you're saying, "Oh, I'm getting ready to go buy me a house, so I'm gonna not pay my rent and I'm gonna not pay all these other things." No, you want to keep things going as normal. Still keep paying your bills, still keep going to work. If you're getting 40 hours on your paycheck, make sure you keep getting 40 hours. So definitely making sure that you're still good on your credit. You don't want to take out any new loans. So don't go out and buy a car after you filled out the application and I say, "Hey, you're pre-approved. Go ahead and go shopping." Don't go say, "Oh, I'm going to go buy a car now." No, wait, 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 wait to buy that car. Don't even take out any new loans. Don't go and try to get a credit card and swipe, swipe, swipe as much as you can. So don't do anything that you haven't done prior to filling out the application. And if you're not sure, like, I'm not quite sure what I should do, should I do this? Call me. I'm just one call away. Give me a call, reach out to me, say, hey, Jen, I'm thinking about doing this or that. Is this okay? And I'll be able to tell you, yes, that is okay, or no, that's not. Continue working. That's a big thing. Continue working. Don't take out any new loans. Don't even have anybody run your credit, because that can, change your credit score. You know that you're trying to purchase a house, so you kind of want to live under the radar, is what I like to tell people. Just kind of keep everything the same. Keep going to work, keep paying your bills. Don't take out any new credit cards. Damon, you have anything that, I don't know if there was any experiences that you have come across in your time
Absolutely.
where people have done some
Absolutely.
stuff.
Yes. Yes. That's why I brought that up. Um, just like she just said, don't go out and finance anything else, whether it be furniture or new car, because I have seen those. I have seen those situations, and it knocks you out of that pre-approval state. So definitely, think of us, think of myself and Jennifer. We're your team. We're your advisors. Just before, if you think about doing it, just let us know first. Just run it by us first. As far as me, I'm anything financial. I'm definitely gonna say go ask Jennifer. But we are your team. We're here for you. We're your advisors. Our main goal is to get you to that closing table. So that's definitely a big one. I've seen it before.
Yes. All right. And just diving into a little deeper with that pre-approval process and what it is that I look for when you're trying to go get a pre-approval so that you can do the fun part and go shopping. Somebody mentioned earlier in a conversation or in a question in regards to debt to income ratio. Again, that's the ratio between your monthly obligations versus your monthly income. Depending on which loan program you decide to use, debt to income ratio is very important because some loan programs allows for a higher debt to income uh, debt to income ratio, where other loan programs are more conservative and you have to have low debt. And so just making sure you understand how much you're making monthly versus how much debt. And when I say debt, I'm not talking about your rent or your cell phone bill or your utility bill. I'm talking about all the debt, credit cards, and loans that are showing up on your credit card report. I'm sorry, on your credit report. So, for example, student loans, car payments, any credit cards you may have, major credit cards through a bank or major credit cards through a major retailer. All of those are credit cards. All of those are debts that I'm talking about. So just making sure that you are doing what you're supposed to be doing, paying those credit cards on time. Debt to income ratio is a huge, huge piece. But there are ways that we can definitely uh, take care of that if something crazy pops up with your debt to income ratio. Next, we have down payment, which is what we talked about before. So just making sure that you count your pennies, 401k, savings account, checking account, IRA, anything where you basically have assets that we can use to your down for a down payment. We can use those. Getting a gift from a family member, all of those are good down payment options. And then, of course, like I mentioned before, we do have those down payment assistance programs that you do have to qualify for. We already mentioned credit history, looking at that credit report. When we pull your credit report, we're looking at the score, and then we're looking at the health. If I could say that, we're looking at the health of your credit report. How long you've had credit, how often you've been late, things like that show up on the credit report. So just knowing your credit history is definitely a huge thing. Assets, how much money you have, which I mentioned before. Having a savings account or a checking account is just as good because you need to be able to pay down payment, and you also have closing costs as well. So just stating those assets on your application definitely helps us with the pre-approval process. Employment history. How long do I need to be working? That's a famous question I get a lot. 2 years,
Yes, it
employment
is.
history. Not at the same job. So don't get that confused, because a lot of people tend to get that confused. Employment history is just that, your history of your employment. How long have you been working consecutively, consistently? I've been working 5 years, 10 years, 12 years. 2 years is the minimum. So as long as you meet that criteria, you should be good. Um, Financial history. We always ask on every application, have you had any bankruptcies or foreclosures in the last 7 years? Definitely understanding the consistency of your income over the past few years. You definitely want to increase, because I've had a question before where someone said, can I leave a job and go on another job? That's fine. Let us know, but also make sure that it's a good move, not that maybe you were making, $56,000 and all of a sudden now you're making 46. That's not a good idea. So just making sure that your income is increasing, if you're going to have a change like that, because sometimes things happen. You get a job offer, as long as you're making increasing moves or going up the ladder and not going down the ladder, you'll find. But always ask first. It's always better to ask before you do. Ask before you do. So that's pretty much the pre-approval in a nutshell. Those are some of the things that we look at when we are looking to get you pre-approved.
So that employment history, I get that question asked a lot too. So thank you for definitely clearing that one up.
Yes.
Two more questions for you are medical bills and student loans. How do those affect the process?
Okay. Typically, medical bills, we don't really look at medical bills. And then as far as student loans, most of everybody's student loans is in
Mhm.
deferment. We understand that. But when you're trying to purchase a home, we have to use some type of payment um, in place, because at some point you will be using you will have to start paying those student loans again. And every loan program is going to have a different guideline on how the student loans should be handled. So it just really depends on what loan program you get. But do you have to have a payment in place that will affect your debt to income ratio? Yes, that's the answer. Yes. Now, what if someone says, oh, well, I just got a letter saying that my student loans are going to be forgiven? Then we need that letter. We need that documentation that shows that that's your case. So anytime you are going through the pre-approval process, anything that's going on with debt to income ratio, employment, your assets, everything has to be documented. Everything has to be verified. So if that's your situation regarding your student loans, as an example, send us the documentation so that we can review and the underwriters can take a look at that, because they're the ones that make the decision anyway, the underwriter. That's a good question.
Thank you. That's perfect. Like I said, these are questions we're getting tonight, and these are also questions that I get asked on a regular basis also. So that is perfect.
All right. So fast and easy pre-approvals, that's what we do. We like to have a smooth transition when it comes to getting documentation from you. So here's are some of the things that you need to send us when you're looking to get pre-approved. I kind of touched a little bit on it briefly before, but if you're a W-2 employee, which is a person who's not self-employed, like let's say you work at um, War, or you work at some government site, or you know you work at the post office, or you work at Walmart or the doctor's office, wherever you work. Pay stubs for the last 30 days. That's going to show us what you've been making for the last 30 days. W-2s for the last 2 years. If you are self employed, we need your last two 1099s to show what you've been making. And I'm going to throw in a caveat on that for self employed people. If you're listening and you're self employed, you do need your 1099. And one of the benefits that you have as a self employed person is you get to write your expenses off. And that's great. When you are trying to purchase a house, it's a recommended suggestion, if you will, not to do that. Don't write everything off. You can talk to me when you're getting ready to do your taxes, or talk to your tax preparer. They'll probably tell you the same thing, because that's a situation that always comes up and always tends to be one of those things that people are like, oh my God, I wish I knew this prior to. If you are self-employed, you do not want to write everything off, because whatever you tell the IRS you're making, that's what you're telling me, the mortgage person, you're making. So if you're making, as an example, let's say you're a truck driver and you make $80,000 a year, but by the time you write off all your expenses, now you're showing that you're only making $20,000 a year, just as an example. Well, I know in Charleston County, Berkeley County, Dorchester County, those areas, you're really not going to be able to get qualified for anything just making $20,000 a year. So that just gives you an idea. Now, if you're in another part of the state or another part of the country where the housing prices are a lot less lower than what we're dealing with here in our wonderful Charleston area, um, then that's different. But just to say, just be mindful how you do your taxes. If you're self-employed, just make sure that you understand, what you're dealing with when it comes to dealing with those type of documentation and showing what you make, because income is very important. That's what we use to basically show how much you can afford. So that's very, very big. Federal income tax returns for the last 2 years, that's for self-employed people. Schedule C's, people that have corporations, it's the same thing. Of course, we need your photo ID. If there's anyone out there who is not from America, then the resident alien card, that's something that we can use as well for those who understand what an I-10 is. We do have those options as well. And then you have, I don't know if there's any veterans out there or people that are eligible to do a VA loan. DD 214, we need that so that we can get your COE, or certificate of eligibility. For those who are retired or who may be on a fixed income because they are disabled, we just need your award letter that shows how much you're going to be getting every month. That's what we'll use as far as your income is concerned. So Social Security, retirement, pension, all those things come with award letters. So that's what your income would be going off of. So that's what we would need from you. For those who are paying or receiving child support, we just need those court order decrees that show this is how much I'm paying out, because that's going to be affected by your DTI. Or if you're getting it, meaning that that's extra income, we need that documentation again to show that. And then, of course, going back to what we already stated before in previous slides, dealing with bankruptcy, foreclosure in the last 7 years, we need those documentation. If anybody owes the IRS, say, for example, if you're self-employed and you end up owing the IRS because you did not write off a whole lot of expenses, then you just need to get on a payment plan. If you can't pay the whole thing off, just get on a payment plan and show us a copy of that documentation. Keep in mind, everything has to be verified and documented. So if it's something that's going on, best case scenario, send us the documentation so we can take a look, and then we can show you how to maneuver what you need to do from there. Okay, so I know I keep bringing up different things in regards to loan programs, and here's some, not all. Here's some of the loan programs, and most of you guys have probably heard of. Conventional loans, we do have those. Your credit score has to be as low as a 620, and we do have the 3% down for first-time home buyers. So we have those conventional loans. FHA loans. FHA loans are usually what most first-time home buyers typically go with. FHA loans, your credit score just has to be a 580, and that's 3.5% down. So I know people may have heard from parents or grandparents that you need 20% down and 10% down. Notice that these down payments are pretty low, so they're pretty easy to
Mhm.
obtain, which is great. 3% down on conventional loans for first-time home buyers. FHA loans, 3.5%, pretty low. VA, 100% financing. So that means you don't have to put a down payment. You can, and if you have the funds, I would recommend so, because that would be less of a loan that you have to borrow. So if monthly payment is a issue for you, or you're kind of concerned about your monthly payment, feel free to put some money down so that we can um, lower that loan amount. So that's helpful too. And those are for people that are veterans, um, retirees, that kind of thing, that have military experience. And then USDA is as low as 600. That's also 100% financing. You don't have to put anything down. You just have to make sure that the property that you're trying to purchase is in an eligible rural area, and you can reach out to Damon for that information regarding that particular property. And then, of course, there's jumbo loans, and that's pretty much anybody that is going to be purchasing a home that is over the conforming limits of that particular county. And then we have different financing options for that. As far as how much money you need to put down, it just really depends on the scenario that you're working with, because there's different jumbo loan programs that we have available. And then, as I mentioned before, first-time homebuyer programs, homebuyer education courses. That just means that you'll have to take a course about home buying. Usually it's online, and certain programs, loan programs or products, will require you to take a course about home buyer education. Um, there's national programs for specific careers, like the doctor program for doctors, the dentist program. South Carolina Housing is getting ready to finally tell us some information, hopefully in the next week or two, or within the next month, about the down payment assistance program that is just for people that are like police officers and teachers, EMTs. So there are some programs out there that's for specific career people. So that is what we offer as well. I don't know if anybody had any questions regarding a specific product or program.
We do. We got a quick question
Okay.
about FHA 203K program.
So the FHA, that's a 203K, that's basically a rehab program. So that's a like if you're trying to do a renovation of your home, that's an option. I actually haven't done any of those since I've been doing this career, but that's basically what it is. It's just a loan that helps you with like renovations to your
Okay.
property.
Okay. And we got another one about VA loans and funding fees.
So I believe the funding fee for a VA loan is, I think it's 1.75% of the loan program. Um, there are there are opportunities where you don't have a funding fee. So it just depends on your actual situation. Everybody's situation is different. But you can also add that to the loan, so it's not something that you have to pay like out of pocket, like down payment or closing costs. It could be financed in the loan also.
Okay. One more. We're still on VA loans. The credit score. How much does that factor into how much you're they're able to qualify for?
So credit score across the board, it doesn't really matter um, which program you decide, but with credit score basically just tells you how risky you are. So the higher your credit score, the better interest rate you're going to get, because that's what credit score is mainly looked at for? How risky are you? Do you pay your bills? Do you pay your bills on time? Are you managing your finances? That's what the credit score is all about. All you need is a 600 for, I'm sorry, a 580 for the VA loan. Um, and so it's a pretty low interest rate if that's what you're trying to get into when purchasing a home, is looking at that VA.
Perfect, right on point. Um, move on to the next one.
Okay, and for some reason I think I lost my screen. Did anybody lose their screen? Are you still there?
Yeah, we
Are you
still
still
here.
there? Okay. Because for some reason my whole screen just went blank. Okay. Hold on. Let's see if I can get it back. Okay. There we go. I'm sorry about that. Okay. So the home.
Got
Okay.
it. Okay.
Okay. Home loan process. So this basically is kind of reiterating what we already talked about, but this just gives you more of a detailed process of how the home loan process works. Filling out that loan application is the first thing. And in that loan application, it's just going to have all of your information as far as like your social, your date of birth, um, the location that you're trying to purchase. It'll ask you for the sales price amount or what the monthly payment is that you're wanting to stay in. It'll ask you about your assets, your income, all of your debt, your liabilities. So all of that is going to be in the application. So it's about a 10 or 15 minute application. You could do it over the phone with me, or I can send you a link where you can go ahead and apply. And home inspection is another piece of that. That's optional, but I always recommend to do a home inspection. It's different from an appraisal. Appraisal is when you have an appraiser come out and they just basically take pictures and they look at to see what the house is worth, and they use different homes that have been sold within that certain block or certain area to determine that. But a home inspection is actually the detailed report of the property's condition, whereas the appraisal is all about the value of the home. And then you have homeowners insurance. Usually, once you get pre-approved and you find your home that you're interested in, I always tell people go ahead and start looking or thinking about what insurance company that you want to use. I always tell people to start with who their car insurance with, because a lot of times if you bundle your insurance for your car and for your home, you can get a pretty good deal on that. So homeowners insurance is definitely a piece of that puzzle. And then after that, once you send me a contract, once you and Damon send me a contract, then there is the loan processing piece where now I get that contract and I work with a processor, and then we start putting your loan file together. We may ask you for a few more things outside of your pay stubs and your W-2s and your tax returns and stuff like that. There may be a little bit more information that we may ask for as we're putting your file together and getting it buttoned up to send to the underwriter. The underwriter is the person that makes the final decision. They're going to look at all the documentation that you have sent us. They're going to look at the property and all the information that is known about that property, as well as all of the information that is known about you financially. Keep in mind, this is what they're thinking about. Okay, we have person A that is looking to purchase XYZ property. XYZ property is, let's say, $300,000. That's like somebody coming to you and saying, hey, can I borrow $1,000? And you've never met them before. You're going to be a little hesitant because you don't know them. First thing you're going to ask is, are they going to pay me back? How are they going to pay me back? Can they pay me back? So that's what the underwriter is thinking. That's why when you're getting into this process, you may get a little like, oh my God, they're asking me for so much information, but they're asking you for that information so that they can try to analyze and understand what type of person you are as far as your finances. The biggest question they want to know is, will this person be able to pay me back? So they're going to ask you for a lot of financial information. So just keep that in mind. And I think if we can educate more people on how underwriters think, I think it helps for the actual customer or the buyer to understand why there's so much information that they're being asked for. Because they're basically just trying to make a decision based off of
Absolutely.
what they can find out about you. And then they're trying to see if that's going to continue for at least the next 3 years. So that's pretty much the underwriting piece. And then after that, we get those three beautiful words that's called clear to close. And basically, what that means is we've looked at your file, everything looks great, your income is on point, your credit score is on point, your credit report looks good, you're a person that pays their bills and pays their bills on time, you know how to manage your money. um, the property looks good. We got the appraisal back. The appraisal is good. The home inspection is good. You got approved for down payment assistance if that's something that you were going for. So they're looking at all that information, and as all of those are good to go, then we get those beautiful 3-letter words that Damon likes to see. That's what I like to see, clear to close. And so now we can start preparing for closing. The attorneys are working with us to send us information, and then we choose that date and we go to closing, and then you sign that big old package that looks like a phone book. I kid you not. I like to tell my clients, please exercise your wrist and your arms and your fingers, because you're going to be signing a lot. I'm stressing that, but it's so true. You're going to be signing a lot. And then after that, you get your keys, and now you are officially a homeowner.
Absolutely. Like she said, the best 3 words in real estate is clear to close. And then we're at that closing. My only job is at closing is to take pictures and tell jokes. That's about it. But we're gonna go back to that first step. Number one, your loan application. That's the most important, and that's where everybody hesitates at, I would say, and that's where everybody their biggest obstacle is number one, actually going and filling out the loan application. Once you do that, the rest is kind of easy because now you have a team. You have myself, you have Jennifer. We're going to help you all the way through to number 8. But number one, you got to take that big step on your own.
All right. And like I mentioned this before, a lot of these slides are just reiterating some certain things that are like super important that we're trying to basically drill because they're just so important. Just being able to stay pre-approved, like I mentioned before, and like Damon had mentioned, stay on your job, continue to work. Don't try not to take any days off. I mean, it's just that serious because until you get that clear to close, we're constantly in the beginning, we're asking for 30 days of pay stubs. But from the time you get pre-approved until the time you actually at the table signing, they're going to even check your credit. So that's how people are able to find out if you went and bought a car, or if you went and opened a new line of credit or something like that. So staying pre-approved is very, very important. We're almost to the end. So don't mess it up now
Gotta
by, not paying your bills or opening up new lines of credit or doing something crazy and it affects your credit report. Leave your down payment money alone, because the day or 2 days, either a day or 2 days before we have to go to closing, you're going to have to wire those funds to the attorney, and they're going to want it in a wire. They're going to want the down payment, the closing costs, which basically is called the cash to close, the money to basically close on your loan. They're going to ask for that up front. So don't do anything with that money that you have already set aside and deemed as your cash to close money. And then I have a little note here when it comes to collections accounts that are showing on your credit report. If you do have a collection on your credit report, call me so we can discuss it. Or basically, I would really just end up calling you, because once I run your credit and see that credit report, we're going to go over that whole credit report, because I like to educate. I'm a huge educator. I like people to understand what they're getting into. I like people to understand this is why Your credit is where it is. So we're not credit specialists, we're not credit analysts, but we do have a simulator that we could use to kind of help you get to a particular credit score if we need to. I am connected with some credit people who can help you. But before making a payment on a collection account, um, or doing anything with any collections or anything involving your credit report, please let's have a sit down and discuss it first so that we can make sure that we're not doing anything um, to basically change or alter what we're trying to do. And that's
We
with
do
anything.
we do have two questions. One is, how long is the pre-approval letter good for?
Pre-approval letter is good for 60 days. So from the time I send you that pre-approval, I'm going to send it to your realtor also. So you have 60 days to go look and find. And if you, being that you have a great realtor like Damon, he's going to make sure that what you're looking for is going to line up with what he's showing you. So a lot of times that helps with the time because you're not just randomly looking at 10 and 15 and 20 homes. Um, so that's why we say, you know, stay pre-approved. It's a time thing too when you're in this. Just like finances and credit and all of that is important, time is very important, and time is of the essence also.
Absolutely, absolutely. And the other question is about rate locks on the pre-approval letter. Is that rate locked in, and is that a good thing?
No, there's no rate locks when you get a pre-approval. Your rate can only be locked once you get a contract. So once you get your pre-approval letter, you'll get it, your realtor will get it. Y'all can start going out shopping that day if you want to, or within the next few days you can go shopping. But if you want that rate locked, you definitely want to send me a contract ASAP. Then we can go ahead and lock that rate. And keep in mind, rates change
Outstanding.
daily. Rates change daily, which I'm sure you guys know, just like airline tickets change daily, rates change daily. So if you feel like you're getting a great rate, um, go ahead and go out there and get that contract so we can go ahead and lock that particular rate for that day.
Outstanding, outstanding. Did that change come up?
Okay, and so here is getting close to the end here as to why choose Guild. Basically, choose Guild because we have your back. We pretty much can do just about anything. And my team specifically, we've got over 20 years of experience. We know the loopholes. We can kind of be creative when it comes to financing too. There's a lot of everybody's scenario and everybody's situation is going to be different. So it's good when you can connect with a team that has seen a lot of things and they know how to uh, get what needs to be done, if you will, when it comes to your situation. Because there's so many different things out there that could be happening. Like I said in the beginning, Guild has over 600 programs to offer, and we are a direct lender, which means, we're not going out and finding money. We have the money, we have the direct relationships, which means fewer overlays and delays. We have an in-house underwriting system. So we've been known to close loans a lot sooner than a lot of people. We really know what we're doing and we're really here to help. We've been here over 60 years. So that's pretty much why. And you got me.
Yes, absolutely. All right, all right. So we're up to step 4. Jennifer definitely went through why that pre-approval is so important. Um, a lot of reasons why. Matter of fact, as far as financing and everything, why that big step is important to get all that done first before finding a real estate agent. But I usually say, go ahead and find me first, and I will direct you to where you need to go. That's no problem at all. But again, like we talked about with that pre-approval, a lot of times when we're putting in the offer, that makes your offer look a lot stronger when I can put that pre-approval letter with it. Because that's assuring that seller that, hey, you have been through all that process already. But sometimes offers are put in without that, meaning they still need to go through that process. So that may be another wait time added on to that process. But if you come with that, they already know you've been through that side of it already. So that's number 4 as far as the getting pre-approved, and find yourself a great real estate agent. Find somebody that will not only that's good working with you, knows the area, but will also tell you exactly what you need to hear as far as the market and everything else. That's not trying to sell you on anything, of course, and that you're comfortable working with. Number 6, this is the fun part. This is when we start to go shopping. I would say on this part, think about where you living and where you want to live at in relationship to where you work at. Think about schools. Think about all these different things as far as different dynamics of your family. Consider all that when you're looking for different areas. Another good thing to do, I tell folks to do, is go out, and when you know what subdivision you want to be in, at least go out in the mornings during high traffic times, during rush hour, and drive back and forth to work, so you get a feel for that traffic in that area, in that subdivision. It may be too far away with traffic. You may change your mind about it, but that's one way to think about it when you trying to narrow down where you want to be as far as subdivisions. As far as myself, we go out shopping. I'm going to send you some homes. You're going to tell me what you like, what you don't like. We're going to narrow it down. We'll go out searching. Then once we find that home that you like, you and your family like, or you yourself like, you're going to let me know. And then that's when we're going to go to number 7. We're going to make an offer on it. Depending on the comparables in the area, we're going to make an offer on that home. I'm going to also, once it gets accepted, I'm going to take that back. Before it gets accepted, I'm sending it to Jennifer also, just to let her know, hey, this is the home. Do you see anything I'm not seeing? Any problems with it as far as HOA fees, anything like that? Because all that factors into the process also. And then once we get the okay, then we're going to put that offer in and get it accepted. As far as purchasing a home and buying and selling a home, I always say it's 3 phases. So your first phase is you and that seller agreeing to terms on a contract. What's on that contract? Closing costs, closing date, and your contingencies. So that's phase 1. And one of your contingencies is going to be number 8, getting that home inspected. Like Jennifer said, I definitely recommend it. It is your choice, your option, but I definitely recommend it. That way, it's no surprises. You know what's going on in the home. You know what's wrong with it. You know what's not wrong with it. Get that home inspected, and once it gets inspected, we can sit down and look at what they recommend need to be repaired. We can go to the seller, go back to the negotiating table. Hey, seller, we need you to fix 1 through 5 or 1 through 10. Seller may come back and say, I'm only going to fix 1 through 5, and that's another negotiating point. After that home inspection, we're negotiating. But let's say everything goes perfect, goes well. Seller say, hey, I'm gonna fix everything 1 through 10. Then we're on to the next step, which is phase. This is a closer look home inspection. This is one of my trusted partners that I work with, Peter Newman. He's great as far as home inspections. Done a lot with him. He's always great and on time with it. But he's definitely one of the inspectors that we use.
We have a question, Damon, if you could answer. So who pays for the inspection and or the appraisal?
Great question. So the inspection, that's one of your upfront costs. That is paid for by the buyer. The buyer is going to pay for that inspection, and the price of the inspection varies. It varies on the size of the home, whether the home has a crawl space or is it on a slab. So different prices in there, anywhere from 350 to 450. I put it that way. It could be somewhere in there. Depends on the size of the home. And the appraisal, I think you can answer that one, Jennifer.
Okay, so with the appraisal, it's the buyer that pays for the appraisal. For us, that is a fee that will go to your loan, inside of your loan, so you don't have to necessarily worry about bringing anybody a check or giving someone cash, or if you will. It's just a fee that's actually going to be associated in your loan. That's a good question.
Perfect question. Perfect question. Very good question. So the appraisal is phase 3. That's the last kind of hurdle that's in the process. But the appraisal is definitely an important one as far as the loan side, because like Jennifer said earlier, it tells the value of the home. Let's say you're purchasing the home at 300,000, and the appraisal comes back in at only 250,000. That's when we go back to the negotiating table. Say, hey, seller, the home is only worth 250,000. Either you're going to come down, or this is one of your options when you can walk away from the contract, because the bank is only going to lend you what the house is worth. So this is one of the contingencies that we put in there early on in the contract, to have you able to get out of the contract because of appraisal. So that's one option. Like I said, the seller can come down to 250, or you can come out of pocket and put that 250 to go back up to 300,000 with the offer you put in. That's another. Those are two options for you. Seller can come down, or you can walk away.
So we have another question, another great question. What is the earnest money deposit?
Earnest money. Yes, that's a good one also. Earnest money deposit, it's the amount of money that you put down, as far as how it shows that seller how interested you are in that property. I usually say 1 or 2% of the offer price. But one of the best example is, let's say the seller has 3 offers in front of them. Everybody, as far as the offer, has offered 300,000. Everybody offered 300,000, but somebody put earnest money down $10. Somebody put down an earnest money of $500, and somebody put an earnest money down of $1,000. Now that seller is going to look at all those offers, and I guarantee you he's going to take the highest earnest money, because they show the most interest. They show the most interest. All the offers are the same except for the earnest money, that $1,000. So he's showing the most interest and saying, "Hey, I want this the most." So that's one of the ways that earnest money is looked at.
Can they get the earnest money back?
Yes, you do get your earnest money back unless you are in breach of contract. There are ways you can lose your earnest money. If, for instance, you breach the contract as far as missing suspense dates or timetables or anything like that. But that's what your real estate agent said for. Also, we are not going to let you breach contract. And we're going to definitely make sure you are able to keep your earnest money too. Again, going back to phase 1, those are the different contingencies that we'll put in there, allowing you to have an option to get out of the contract. Inspection, like I said, inspections is one. Let's say you and that seller don't agree on getting everything fixed. Then, okay, that may be one of the ways you can walk away from the contract. Like I said, appraisal is another one also. That may be one of the ways you are able to walk away from the contract. So again, that first phase is a very important phase, because we're going to put in there different contingencies to help you throughout the contract. Transaction. Were there any other questions on that one?
I didn't see anything come up, so I think we're good.
Okay. And then the last one, number 10, what we talked about earlier, that famous 3 words, clear to close. You got your settlement and your closing. Jennifer definitely broke down as far as the closing. Be ready to sign a lot of paperwork. Get your keys. Oh, let me back up a little bit. Before that, depending on the time of the closing, we'll have a final walkthrough. We'll take you through a final walkthrough of the property and make sure everything that is in the contract is still there. Make sure there's no damages. Make sure everything is the way it was once we once we ratified that contract and went under contract with it. Everything needs to stay the same. The seller is obligated to keep it the way it's supposed to be, and that final walkthrough is just reassuring you that it is. So you're not signing for something that has broken windows or missing different appliances that were supposed to be there. So we had that final walkthrough, then it's on to closing. We are signing a whole phone book worth of stack of papers, and you get your keys. So I think, see if this will play. I do want to talk about one quick program, Homes to Heroes program, show you a quick video about the program. So Homes for Heroes is an awesome program. Like I said, there's no red tape, no fine print, anything like that. I put many veterans through it, and they are smiling just like the people in the video. So if you need more information about that, please contact me, let me know. And this slide, do we have any more finance questions for Jennifer? This is also her information too. So you get in contact with her. And don't worry, at the end, we'll have Jennifer's information, we'll have my information, just in case you have more questions or after the video also. And here is closer look at inspections again. Again, this is Peter Newman. We'll be working with him as far as the inspections. So definitely have his contact information also. And here's Holland Homes team. We are at a little bit over an hour. This is pretty much exactly where we wanted to be, but we definitely wanted to get everybody the information and make sure we answered all your questions and as many questions as we could. Jennifer, you have anything else?
No, I think this was great. You guys have our information, so if any questions come up, later in the week or the weekend, feel free to reach us. I'm great with texting, email, all those things that you can use. And if you're ready to see how home ready you are, please reach out to us. We can get you the link to fill out an application, or you can call me and I'll be happy to do the application for you over the phone, whichever is easier for you. Let's just see where you are. You may be ready and think that you're not ready, but you actually may be ready. Or it may be something as small as need a little bit more money so we can look into down payment assistance, things like that. So yes, exciting times.
I just want to everybody understand, reiterate, we're not doing this just for if you're looking to buy within the next 3 months. If you're only, like Jennifer said, you just want to see where you are and maybe purchase, get ready and start getting things ready to purchase a year from now, we're here for you also. It doesn't matter if you're ready to purchase in 3 months or a year from now. definitely contact us so we can help you through that process also, definitely. So again, great information. Thank you, Jennifer. We appreciate it. We're definitely going to have you back also. Um, Contact information will be coming out soon, right after this. Dana, do you have anything else? Did you want to say goodnight to the
All I
people?
Yes, this thank you, Jennifer. This was the one of the best presentations I've heard in a long time. Make me want to go out and go buy a house again. So thank you so much for sharing your wealth of knowledge. And of course, our resident expert, Damon, thank you so much for hosting this So You Want to Buy a House. Thank you, everyone, for your attendance. Please make sure to like, share, and even comment if you have some questions that may come up after this presentation. Definitely feel free to do that. And so after this live stream, I would ask our guests to stick around in the green room. We'd like to show her our appreciation. Back to you, sir.
All right. That is it. Thank y'all for coming out. See you when I see you.